All right, good morning. Today is June 7th, 2023, and I'm back with another Wednesday live show. Quick look around the markets and other interesting observations. Nothing too exciting going on. We're heading into summer here, and quite honestly, the market has been a lot more resilient than I think most people have anticipated, and it's kind of a strange environment. The Fed, everyone's on the fence about whether the Fed's going to raise rates in June, and it seems to, I saw something this morning where somebody commented that if they if they don't raise, right, then the market's going to kind of take it as a pause, and that might not be good. So if they're planning on hiking more, they might as well just go ahead and get it over with. And then somebody came out the other day, I'm not sure, it was yesterday, and said that they need to raise 50 basis points, right? So I'm not sure what the market's pricing in, but over like it seems like the past year or even longer, the market's always is pricing in like the fact that they're going to cut later in the year, which seems ridiculous, but and I suppose the reason for that, I mean, the only reason they would cut is because of some sort of catastrophe or crisis or emergency or something, because they've been saying over and over for as long as I can remember that they're planning on holding rates at, the terminal rate. So I guess, it just depends what the terminal rate is. But the most surprising thing at this point is the resilience of the overall market based on the fact that interest rates have gone from 0 to 5%, right? So that's kind of unusual. I saw something else this morning, that data point that said that like 83% of, S&P 500 CEOs are expecting a recession in the next 12 to 18 months. And so you've got that kind of looming there. They've been talking about recession, mild recession, all that type of thing. So, and of course, inflation has been coming down, and everything seems to be debatable these days, right? When you talk about inflation, it's debatable. There's people out there that point to, and quite frankly, the data is debatable anymore, which is kind of a strange sort of thing, because you can pull up data that says that, hey, inflation is basically tamed and on its way back down to 2%. And then there's other data points. The data points I like are when I go to the store and see whether prices are increasing or package sizes. There was something also I saw recently that of course, food food's one of those things that has a certain weighting. When you talk about inflation, you talk about food, but um, it's a data came out recently that said that basically food was up 40% in the last couple of years, or something like that, or the last few years. Just incredible inflation when it comes to going to the grocery store. And so, oh look, Yellen was on CNBC earlier talking about easing labor market may help inflation. So anyway, the big thing here is they already messed up. I mean, back a couple years ago, before anybody, they kept saying there's no inflation, and the Fed was all worried about the fact that there was no inflation. And then the pandemic happened, right? And that's really that's really when everything got screwed up, because, well, you know the story. Anyway, let's look at the S&P here. Interestingly enough, and I decided to start with this zoomed out chart that shows the pandemic, because the pandemic and the subsequent liquidity that was added to the system, in my opinion, is the reason that we experienced such incredible inflation, which, by the way, peaked, I believe it was, it's going on a year now. It was like last July, interestingly enough, right about, here's July, but inflation peaked at like 9.1% year over year, which is crazy. And we had all those months where inflation was, really significant year over year, but it peaked, and I believe that the Fed is worried about it re-emerging, and so that, I mean, that's something to worry about. I believe I've read that that's what happened in the 70s, right? Is that you had this sort of runaway inflation, and then they reached a point where they thought, okay, well, it's over now, and then it reemerged, and even worse. And of course, the problem with inflation is that once the prices go up, even when inflation comes back down, the prices remain elevated. So it's kind of a play on words, and it's kind of a trick that that they like to, economists and politicians and those type of people like, it's like a trick they like to play on the media, especially. They talk about inflation coming down. Inflation's coming down, inflation's dropping, inflation's, the thing of it is that the damage has already been done, because the general price levels of everything that people buy went dramatically higher. And so when the rate of inflation comes down, that just means that the prices aren't going to be increasing as fast or as much, but they're still going to remain elevated. It's not like prices are coming down. So they like to insinuate when inflation comes down, that means that prices are coming down, and that's not the case at all. So anyway, and then there's a lot of things that are just excessively expensive these days compared to the old days. Of course, the thing of it is that everybody knows this. It's sort of endemic to our system, is the fact that the cost of living goes up, constantly your whole life, right? So anyway, we know that. So taking a look at the market here, there's an obvious, and I mentioned this couple times here recently. We looked at all these different sort of points on the chart and these levels and that, and I mentioned that like, aside from everything, if you just look at the chart, sort of the pattern, it kind of looked bullish, right? And so, we had a period of time where there was big resistance right there at that level. 4200 was the big point of resistance. So anyway, this peak from last August back here, let me zoom in on that a little bit. So let's see what that is. I just want to see what the high is right there. The high was 43.25. 43.25. And so, that's and of course we're at 42.90 here. So it's not much further up, but that seems like a pretty obvious resistance level. Somewhere up around, there we go. I drew this so I mean, we're getting close to a resistance point here, right? I also pointed out last week how the S&P seemed to be sort of climbing up this 50-day moving average, and I believe last week when I was here doing the show, it kind of looked like, maybe we'd get another a little pullback to that 50-day, because it tends to, recently anyway, since it actually like broke above it decisively back at the end of March there. It's kind of looked like, each pullback sort of takes it to right around this 50-day moving average, which is that orange line. And so, last week it kind of looked like maybe we'd broken out a little bit, maybe we were going to pull back, but now, and I don't know whether this has to do with positioning or what, but, as everybody knows, there's a handful of stocks holding the market up, and it's a kind of a narrow market. But interestingly enough, just the past couple days, and I don't know what this is all about, but the Russell 2000 all of a sudden has turned into sort of a rocket ship here. And the funny thing is, I was just pointing out last week, there it is. last week we were there. It is. I wanted to get get all the way back to the pandemic sell-off because that's sort of the big picture. I mean, anytime I look at a chart now, I guess until finally eventually this drops off, but to get a real sense of the bigger picture, you have to go back to you got to start like just prior to the pandemic sell-off so that you can capture the where the price is in relation to the high before that happened, because that was sort of I mean, that was a historical event that affected the market and has affected everything, continues to affect it. So, but anyway, I was pointing out last week how the Russell 2000 was clanging around here in this range, closer to the lows than the highs, and for whatever reason, just here recently, let me zoom in here so I can get there's the peak up there, late 2021. All of a sudden, the Russell's seeing some buying here, some buying pressure. But if I drew that resistance level on the S&P. This is worth noting because you can see a similarity between the peak that the resistance level I drew in the S&P and how when it rallied up here, of course this is a whole different time frame, but you can see what happened. I mean, it literally like rallied right up to that spot and then got rejected. And so that's just something to consider because the S&P is like right in this area here where it's about to run smacking that resistance. And of course, a few pixels here and there, but yeah, it's interesting to see sort of, and this could just be well, obviously some money's going into maybe money's coming out of some of the larger caps and people are speculating that some of the smaller caps will start participating. I don't know. But I mean, this thing is still closer to the low than the high, so that's something to consider. Um, the Q's on a tear here, so it feels like this AI stuff is reminiscent of, well, I mean, it's reminiscent of the dot-com bubble, right? So, and I've said for a long time, technology and all the different sort of things that people latch on to um, is reminiscent of the dot-com. And there's tons of charts out there that have already like had their dot-com bubble and imploded, and sure, there's just tons of fad stocks. I'm talking about like something like a Peloton, right? That's this is typically what a fad stock looks like. Of course, this is not a technology company. I wouldn't guess, but there's tons of these things out there. Um, let's see, take something like a Snap. Yeah, there you go. So we're in a weird spot here. Something like Snap has already had like its dot-com bubble and bust. And that's what those charts look like. And so, stocks like this, geez. I mean, is this thing ever going to recover back to, these areas here? Um, Doubtful, kind of doubtful. And of course, the other thing is, obviously, we're talking about booms and busts. Apple here. Apple, just absolutely incredible. So, and I guess you guys saw the goggles that came out. That's gonna be kind of interesting. I mean, they look super cool. They're $3,500, right? And obviously, it's I don't know what to think of it yet, but I know one thing is that I couldn't imagine like wearing those things for more than about 15, 20 minutes at a time. And so that's I think that's going to be the main problem with them. I don't care what you put on, um, any kind of like goggles or headset or like a ski mask or a snorkel mask or anything like that is going to get uncomfortable after a period of time. But it's pretty cool though. I mean, from what I saw, a lot of people made fun of it. It'll be interesting to see, how that pans out. But This is their first new product launch, I guess, since they came out with the iWatch. Anyway, this is an amazing chart here, considering Apple's the most widely held stock on the planet, right? And I've got another chart with like the big channel. You can visualize that the trend lines drawn across the highs there and the lows, and so it broke out of that big channel, and it's poking around. You can see that big spike up the other day was when they just a couple days ago, right? Was that Monday? They had their big presentation and came out with their goggles and all that stuff. So, but here's the thing about this chart is, there's lots of zigs and zags on the chart, and which is pretty amazing in and of itself, considering this is the most widely held, most popular, one of the largest market cap, if not the largest market cap company on the planet. The fact that it can make these dramatic moves, and so starting from down here at the beginning of this year, what what is this level down here? This is like, call it 120, 125, 123, 124, like starting from this level down here up to 180 in sort of a straight line is pretty incredible. The fact that the market cap was a gargantuan down here, and the fact that it could go on a tear like that. So this kind of makes me a little bit nervous because, sure, could it keep going? Yeah, it could. It could keep going and keep going and keep going for a while, but maybe a little bit higher. But it does sort of look like, it's running into some resistance. And like I said before, just because a market or a stock pokes above resistance, typically you want to see it build a base like sort of above that. But if for some reason this thing cracks, then the market's in trouble. I believe I said before, prior to recent earnings, that so goes Apple, so goes the market. And so Apple has continued to climb. And then, of course, you got all the AI hype. There's Nvidia. And the thing about this is the valuations, right? And so when you kind of look under the surface, they came out with these earnings that on the surface, the headline numbers always look great. They beat lowered expectations and all that. But quite frankly, there's a lot of this thing's trading at like the highest valuation ever as far as like PE and times revenue and all that kind of stuff. So, the whole market's getting a little frothy here. Whole market's getting a little frothy. The Nasdaq is approaching. I'm gonna say that this is a pretty and this is still a ways up on the Qs here, but this is I guess this is like the big resistance zone for the Nasdaq, and of course it was able to it just sliced right through that one. The S&P is struggling with trying to come up to that one. So, but here's one of the important things that's happening right now is the equal weight S&P is looking pretty weird compared to the regular S&P, right? So we'll take a quick look here. So here's the regular S&P, right? There's the regular S&P, like rallying up to this prior point. And notice this little area right here. Notice this area on the S&P. And now we're going to flip back to, actually let me do this. Let me try this here. RSP. There we go. This is kind of funky, squeezing these charts together like this, but two different pictures. And so basically, this is the market cap weighted S&P with Apple and Microsoft and Google and Nvidia and the big cap stocks, price weighted, and so, handful of stocks. This is the equal weighted, where you take all 500 S&P components and weight them equally. And so it's a little bit different of a picture. A little bit different, I suppose. But what's interesting is on this particular one, I think was this move right here. Right? So, I mean, if you look back over here, at the beginning of 2023, that's much lower than, the peak last summer, and this time it was higher. But anyway, that subsequent sell-off and bounce. So basically, what you're seeing is that this sort of latest leg here. I guess what this is showing is that this latest leg is what we all know, which is that the mega caps are sort of carrying the market. So anyhow, it is what it is, and just sort of breaking out of this consolidation pattern here. Everyone, I think now, there's a lot of things going on. One of which is is that institutions are being forced to chase, I think. Or maybe, maybe they're driving it up so that they can unload it on unsuspecting retail, but who knows? I mean, it's just it's kind of a strange sort of environment. Something else here too that's bugging me is sort of all this sideways price movement. I mean, there's nothing worse in the market than sideways price movement. So if I extend this all the way back over here, I suppose that, and I said this, a couple times in the past couple of weeks, that if the market can, rally out of this sort of sideways consolidation and break to the upside, the overall pattern, it's funny. It's almost like an optical illusion, right? Because if I go back here, if I start my chart from back here, you got this big giant cup, and man, that looks constructive. I mean, it really does. The big giant cup looks constructive. If, on the other hand, I zoom in and start from, right at the beginning of 2022 where the market peaked, take some of this stuff off of here, it kind of looks like the market is sort of more in a sideways kind of. It just doesn't look as constructive. It looks more of like a sideways type of thing. And I mentioned this a few times recently, is you got kind of, and you can put this different ways. Use candlesticks, you kind of cut the wicks off or whatever, but that's sort of the big pattern that we're in here. And so, it's human nature after the market rallies that, everyone starts to get bullish again. And so I just, based on the fact that interest rates have gone up so dramatically, and I think that's still obviously working its way through the system, it just seems like, the opposite of what you would expect has been happening recently with the recent market strength. But of course, that can turn around on a dime. So, well, we saw it right here, right? Like last July, last summer, huge market rally straight up. And, I believe that was based on the idea that the Fed was going to pivot back then, right? And then, it hits a certain spot, turns around, and, and then it was like, once it turned around, it made a lower low, which I don't think anyone was expecting here. So it's not quite as dramatic here. Obviously, it's not nearly as dramatic of a run. I mean, this is like the Apple, straight up run there. But there's a lot of consolidation here, and we're kind of breaking out of it. But it won't surprise me to see some retrenching here. So see, here's the thing: is like I'm not sure that chasing this market right here is a good idea. So keep your eye on that 50-day moving average. Um, and it's kind of nice that the market was able to break out of this consolidation to the upside, but it's going to run into this resistance here, and so we're kind of, I'd kind of at least wait for a pullback towards the 50-day. The market probably, it's probably setting up for a more dramatic pullback, I would say, but you never know. Um, Shorts are forced to cover constantly, and sometimes the market, obviously the market's getting ahead of itself as far as valuations go, and so the all the nasty stuff like a recession, a slowdown in the economy, and rising unemployment and all that, that's kind of stuff that has not manifested yet, and so I think that there's a lot of potential that lays ahead. So I'd be really cautious here. But anyway, so just quick look at the market today. Nothing too exciting to mention, but I think that I think that caution is warranted at this spot. So anyway, I have some stuff to do today, so I will see you here same time next week.